All right, so overall, looks like we had a good day in the market. And I was surprised to see that the SPX didn't move much at all. And my account is up more than the SPX. Let's take a look. So we can see total P&L on the day is $587. Tesla was up. I had $181 there. My soybean future that I opened up looks like 4 days ago, last week, it's up $171 today and almost $200 since I opened it. That's the first time I've traded that, so you can see it on the year to date there. So overall, really good day, especially for a day when the SPX hasn't moved at all. And it's great to see that even though I'm down on Tesla, I'm still able to make up for it and I'm making new highs in my account. I haven't seen $8,500 yet in my account, and yet here we are today. So what I really want to do is see Tesla go up and get even more of that lost money back. So here are the trades that I made today. I ended up closing my natural gas position and my copper position because it closed at 50% profit. So we see here, copper closed here at 7:30 this morning. And then I did my regular 30-20-10 strategy. I opened up a corn position, and then my natural gas position filled this afternoon. So really great to see. Those were really big moves for me, really big profit moves for me. So they closed. Exciting to see. I've got some cash in my account now. But before we go into what I'm going to do next, I want to go over these positions that I made so you can see exactly what's going on. So you can see about 2 weeks ago, I had opened this strangle on the natural gas position, and I had collected $890. Then I closed the position just today and collected $450. You can see I had to pay the $440 to get out of the position. That's why it was 50% profit target. You can see I had a put that I was selling at $1.45, and then I have a call that I was selling at $2.15. This is a replica of the trade that I put on. And at the time, I was doing a 20 delta strangle. My put is at 11 deltas now, and then my call is now at 15 delta. So you can see that over time, the value of those options decayed and the volatility has contracted, which is exactly what we want to see. And the price, it's pretty much stayed where it's been. It hasn't moved much at all. And my daily profit, it was just, and natural gas here was just a steady profit taker for me every day on my account. So it'd be $40 a day or $60 a day until finally I got filled. So with the natural gas here, I didn't have to make any moves at all. Just left it where it was and just waited for the order to close at 50%. And that's exactly what happened. Now I've made a total of $450 on this one move. And it only took around $2,500 of buying power. All right, so with coppers, it's a very wide range here on the option chain. So with copper futures here, it's very wide. The implied volatility is very high. We're looking at around 71.5 on the IV rank, which is low right now for what this thing can do. I've seen it up to 94. I've seen it go to around 84, and I think that's about where I opened my position, was around 84. It's now down to 71, so I'm a little bit hesitant to open up another position here on copper just because of the fact that I've seen the volatility go up really high, and that's where you start seeing negative numbers on your P&L. Not that that's a realized loss. You really don't want your implied volatility to go up whenever you're in the position. So you want to find that opportune time to get in when the implied volatility is high. So I'm really hesitant with it right now. I want to wait until I see it go down below levels I haven't seen. If it's going down to the 60s, then I might, dabble into it again. If I see it go down to the 60s, then I might open up a position again, but I might just wait until the next option chain, which I think is around 60 days. I might wait until this one gets closer to 45 before I open up another position. But it was really good for me. So we can see here I had the position open at 384 and then on the put side, and then I had the call $4.35. So you can see that down here at the first position that I opened. Now these two right here, that was a mistake. I acted on emotion. I saw how much money I made in one day. It was like $500. So I opened up another position. I woke up the next day and that $500 was gone. So I decided, you know what, I'm in too heavy. I need to just get out of the position. And so I did that. Then today, the position closed, my initial position closed at 50% profit. And that's what you see right here. So it looks right now, whenever I place these trades, it was at 20 delta. So right now we see that the call, it's at a 9 delta. And you don't even see the expected move anymore because the price has gone down. And we've seen a contraction in the implied volatility. Here on my put, it's at 18 now. So that's mostly unchanged. I got theta value out of that. And also we have that contraction, like I said, on the implied volatility and ultimately the expected move. So like I said, I bought it at 84 and now it's around 71. It still looks good, but I've seen it move from 70 all the way up to 94. So I'm just going to kind of wait on that, see what happens. So I opened up my soybean futures strangle here last week. We can see March 21st. I've got an 1150 put that I'm selling, and then a call that I'm selling at 1280. The price, it's gone down a little bit, and then it's kind of settled back up. So we're still in between here really nicely. And it's at 18 delta right now, and it's at 13 delta on the call. So really looking good. It was kind of slow at first last week, but then whenever I looked at it today, I had a nice $200 in my account just from soybean futures alone. Let's take another look at it right here. /ZS, that's $171 on the day. We had 200 at the open so far since we've opened the position. So again, I'm just letting time work for me. I'm just letting the implied volatility fall and let that contract on the expected move, and then let theta do its work as well. So next, let's take a look at Tesla. We can see here that I'm up $181 on the day, but don't let that fool you. I am down $1,400 on these two. I'm down $1,400 on these two put spreads that I've got open. So it is affecting my account. Thankfully, I'm back up to where I was, but I really want this stock to go up so I can get my value back up and collect my profit and move on to the next opportunity. I don't want my money to be tied up. I want it to be able to rotate quickly so I can get the returns that I want. So overall, Tesla didn't have too bad of a day. It seems to want to float around that 8 EMA right there, and it did overall have a good day. It's a green day here. It's up. What I think is going to happen in the future up until earnings, I think it's April 17th. Yeah, April 17th here. I think we're going to see this price just kind of float around here. I don't think we're going to see any big moves until we get a catalyst. That's going to be the earnings coming up in about 3 or 4 weeks. So I don't see it really doing much here until we get that earnings, that catalyst to either make it go up or down, whatever it is. I don't see it making big moves until we get that. I think a lot of people are holding until they get that earnings report. We can see it's trading right inside that bull flag here. So we don't have a breakout yet. And like I said, I believe that's going to be earnings. That's going to be the ultimate bull flag here. It could come up in the short term. That's really what I'm hoping for, because it was trading around 200 whenever I had opened my positions, and then it dropped. So if I can get it up to 180 to 200, I'm going to be in a good place, and potentially I could get out of the position and then move on from there before the earnings. That's the ideal thing for me, is that if I can get out of this thing before earnings, then I can avoid a big price move. So we can see here with my 30-20-10 strategy with the E-mini S&P 500 futures, I'm doing a 30-day expiration put spread every day. So I did my regular mechanical process. Looked at my 30 days to expiration. I looked at my 20 delta, opened the position here, $10 apart. Today it was 51.40 and a 51.30 put spread. So same thing I've been doing. It's been working out really well. Of course, the S&P 500 is going up overall. We are pulling back just slightly to that 8 EMA. It's not moving too much right now, but it is up, and so I'm benefiting from that. My biggest test here with this strategy is when the market starts going down, how well does my daily position adjust to that price? And just how big could my losses be if I start getting in the money on these positions? And so we can see here, really, I only have maybe a couple more weeks until I can actually fill this ladder up. And then I'm going to start collecting that premium every day. And then my long-term plan here is whenever I have enough premium collected to open up another contract, then I'll start opening up 2 contracts. And then whenever I have enough to do 3, I'll do 3 contracts. So since I closed my copper strangle and my natural gas strangle, I had some extra cash in my account, so it was time to start shopping. So I looked around and I decided to open up a position on the corn futures. So I want to walk you through my thought process and why I decided corn futures. And I think it's important to note that I didn't really think too hard about it. So I opened up the watch list here in the watch list tab, and I clicked futures here, and then I went to options, futures with options. That gives me the full list of options that are available on the futures here. Then I decided to filter this list. I don't want anything that's not liquid. I want something that's 3 stars or more. And that's going to give me a good list of liquid futures here that I can trade options on. Then I added a column that's IVX 5-day change. This is something that Tony Batista uses at TastyTrade, and he's looking for things that are increasing in IV. I decided to kind of copy what he does there, and I looked at the corn futures. I've seen it before, so I saw that the implied volatility was going up on it, so it attracted my attention. Then I took a look at the options chain. We can see it's just like the other ones. We have 32 days and 60 days. I decided to just go for a shorter one because I want to manage at 21. If the price goes far away, I don't want to have to manage outside of that 21. So 32 just felt right for me because it was just closer to 45, and I just figured, well, let's give this a try. Then I started looking for the delta. Where is the 20 delta, and how much return can I get? So around the 20 delta, it was 415 and 470. So $415 put, $470 call. I did the strangle here, and we can see the price is different now, but we can see probably about what it was. So I put up around $1,300, and then I was expecting around $350 in premium. So in total, we're looking at around $175 that I can collect if the trade is successful. Now, at the same time, I was keeping my eye on copper. I'm looking at the IVR and seeing if it'll go back up to the 90s, maybe even the 80s. If it does, then I want to be ready to take on that trade. Or if it continues to go down further than what I've seen it do before, then I might look for it to come back up, and then I might place the trade there. So I'm just keeping my eye on copper. I really don't know what it can do. I'm really new to it, but I really want to keep my eye on it because it did make me some good money in a short amount of time. I'm also keeping my eye on natural gas. The IVR is low. It's down to $23, but it was a steady winner for me. The price isn't really moving much. Maybe at the 64-day option here, and maybe when it gets closer to 45 days, I'll take a position on it. But it was a really easy win for me. So I definitely want to keep that on my long-term watch list there because it's a good trade overall. Very easy winner. So while I was shopping around for different options to trade here on futures, I was looking at crude oil. That's /CL. And it looked attractive to me. I like how it has a bunch of split options here, a lot of options here by expiration date. And so I was starting to look at 52.25 and see if I could do a strangle. It was too expensive. It was around like $6,000 to do in buying power. So maybe one day I can do that, but not right now. But one thing that caught my eye, and I didn't notice it until after I had messed around with it for a while, was that the prices here on the different futures contracts, if you look at what's happening here, we see $82 on the most recent futures contract. And then if you look at the next futures contract, you see it go down, $81.53. Then it goes down to $80.93, $80.25, $79, $78, $77. That is telling you that this thing could end up going down over time. Now, that's just something that I got from one of the TastyTrade videos that I've watched. It's just a kind of a red flag there that the stock can be dropping. And we know that crude oil has been going up. We can see that gas prices have been going up. So I think it's really just a matter of time here before crude oil can start coming back down. So not totally sure. I could totally be wrong, but that's what I'm seeing. And that kind of made me pause on doing anything with crude oil. I was even thinking about doing a put spread on it, but I decided against it. I'm just going to stay in cash right now until an opportunity comes. The other thing to keep in mind here, and this is something that I haven't been taking very good care of, but also keep in mind that whenever you're trading futures, you can use leverage, right? You're using less money than what you can lose. So my buying power might only be, $1,200, but I can lose much more than $1,200. And what TastyTrade does is they can use your buying power, and that can fluctuate over time. So if your strangle is going against you, your buying power could go above 100% because your broker is saying, hey, you need to hold more money than what you've got on positions right now. So right now it's at 78%. I've seen it go up to 110. That's kind of had me worried if I was going to get charged a fee or whatever, or have a margin call, but it hasn't so far. I've kept cash in the account, and I'm also using T-Flow, which I don't know enough about it to explain it, but it's basically like just a safe place to put your cash, and it makes you a little bit of money on the side. So I've got some money in there aside just in case I've got to liquidate something. And anyways, just keep an eye on your buying power usage because you don't want to end up being over leveraged because you're using futures here and then you end up blowing up your account or you end up losing a bunch of money when you didn't mean to, you didn't realize your risk. That's kind of a gauge there that lets you know how much cash you've actually, that's kind of a gauge that lets you know just how deep you're in on your positions. So just be careful with that, keep an eye on that. And that's the reason why I didn't trade crude oil today and I don't have a position on it today, because the price is going down the futures contracts, and I'd rather have my buying power usage on the low side, sit in cash for a minute, and just wait for an opportunity to present itself. So far we're in a really good position with this account. It's great to see that I'm back up above my losses from Tesla. That makes me feel confident that even though Tesla is not doing well, I've made up my losses already, and it makes me feel like if I need to, I can cut that position if I want to, and it won't, and my account won't really suffer too much. If Tesla's not going to make a move, I do have to make that decision of whether or not I just want to cut the loss on Tesla and move on and use my money somewhere else. $5,500 right now is tied up in Tesla. That's like a third of my account. I don't need it to be sitting there not making me money whenever I've already made up my losses from that move. So I'm kind of torn between Tesla and keeping the position or taking my loss and moving on. I think it has an opportunity to go up, and it might, I know it's going to go up long term. I'm very confident in that. But on the short term, is it actually going to make the move or not? We'll see what happens between now and earnings, but ultimately I'm really wanting to get out of the position before earnings comes out. And because the earnings could be really bad and it drops even further, that's again just more time that my money is going to be tied up. So I just want to try to get out of that position, move on from there if we end up getting close to earnings. So I'm a new options trader and I have a goal of reaching 50% return on my account by the end of this year. And if you want to join me in that journey and learn something from me along the way, then hit the subscribe button. And if you thought this video was a help to you, hit the like button and we'll see you on the next video.